What's going on, traders? It's Mighty Boy back at you again with another trading related video. In today's trading session, we're going to be talking about a very important topic. Today was Friday. A lot of people lost a lot of money, especially traders that I actually follow and respect. I'm talking about traders who make like $1 million a month, 500,000, 100,000 a month. They all were down on Friday, and unfortunately, I was down on the day as well. I was down about $1,400. But I managed to dig myself out of that loss, and I finished the day up $300. But I did not just start pressing buttons to recover that loss and finish the day on the green. I actually followed a proper process that I have that I use on a daily basis when I'm in a situation like this. And I want to share that with you guys. I hope you guys will be able to learn a little bit from it and see what my process is. Anyway, let's get right into it. Thank you guys. Boom. All right, traders, let's just go right ahead and talk about the actual processes that I follow when I'm having a trading session like Friday, where there's a lot of short traps and, risk management's a little bit out of whack and I'm losing money. And what am I thinking and what kind of steps do I take to potentially get myself out of that situation? In this process, I call it the 3 pillars of my day trade. And the first one is pretty simple, trading strategies. Now, under trading strategies, you have technical analysis. What's the chart telling you? Do not look for what's not there. Do not look for what you want to see, but look at what the chart is telling you. See what's in front of you, right? The fundamental analysis. What are their cash flows? If they have ATMs, what are the inner workings of the company? Do they deserve to be at $40 currently when it's in reality a $5 company? In the actual trading strategy itself, is it a short strategy, gap and crap, or is it a long strategy, pre-market breakout? What are your entries, exits? And all of those things are one pillar of day trading, and they are under trading strategy. Now, the second one is trading psychology, and under trading psychology you have FOMO, fear of missing out, when you're chasing, when you're not being patient. All of those things you need to master, because we know trader mentality, trader psychology is one of the major pillars of day trading. If you're not good at that, or if you've fallen into the traps of chasing or fear of missing out and those sorts of emotions, then you're not going to make money, right? So you need to be good at that kind of stuff. And the last one, and one of the major pillar of my day trade, is risk management. Now, under risk management, you have things like daily max loss, your stop loss, your risk reward, things that would stop you having a bigger loss, right? Now, as a trader, you have to understand that you are bound to have a losing days. You are bound to have a red day. Now, if there's a trader out there who claims I have 100% winning rate, that is total bullshit. Don't buy into that, right? So now the reality comes in. If you're bound to have a red day, if you're bound to have a losing day, why not put a cap on it? For me, that max loss is $2,000. If I'm down $2,000, I get up and I walk away. Think about the times you've blown an account. Don't you wish you stopped it when you were down, 1/4 or half or 75% down? But you didn't. That's why you're blown out. So this risk management would prevent you losing everything. It's a firewall from you losing everything. Now, on Friday, one of the things that was missing from my trading was, risk management. And when you're down on a day and you're red and you're getting close to your max day loss, you need to kind of think about what are the 3 pillars. You need to go back to the roots. Not every red day is going to turn into a green day. You need to have a number in mind where you say, okay, today's bound to be a red day and I'm not going to fight it, because fighting it could lead to losing everything. So that's why you need to have a max day loss. And my max day loss, as I said, is $2,000. On Friday, I was down about $1,400. So I had about $600 of risk I could take to kind of make the money back and get into the green. So I wasn't just pressing buttons to get out of that loss. I was following a proper procedure. Now, once you establish your max day loss, then you can use your trader psychology. Oh, what's missing? Am I not being patient? Am I chasing? And also you can think about your trading strategies. Am I not executing the trading strategy? Am I not stopping out when I should stop out? You can use those things to kind of guide you step by step to get out of that loss and finish the day green. And that's exactly what I did. Those are the processes that I took. I took a step back and I realized, okay, I'm down on a day. I need to understand what is missing, which part of these pillars are missing, and what do I need to do to kind of work my way out of this. And that's the process that I follow. Anyway, guys, and I hope you guys learn a little bit from this. I hope you'll be able to apply this into your trading as well. All right, traders, let's talk about some of the trades that I took today. Today was end of the week Friday. Was a lot more choppier. Was a lot of short traps. They go up, they trap shorts and rip higher. And in the morning, I kind of made the mistake of falling into that trap. And as you guys can see right here, even though I finished the day up 300, I was down. If you add this up, I was actually down almost 1,400 bucks. I was down $1,400 on the day. And you know, and then I had to kind of snap myself out of the situation, right? You can be wrong. It's okay to be wrong, but do not stay wrong. Be wrong, that's fine. As a trader, you're bound to be wrong. And if there's a trader out there who says, you know, I have 100% profitability, you know, 100% of the time I'm correct, don't buy to that bullshit, because it's completely bullshit, right? But as a trader, you have to adopt. And if you're wrong, acknowledge that you're wrong. Do not stay wrong. If you stay wrong is where you turn into you know, $1,000 loss into $10,000 loss. And these short traps were pretty much across the board. I mean, I can show you some of the guys you know, that I follow on Twitter. This is Mr. Shah. He was down about almost $90,000. Traded the same things, LIRO, FTSI. He traded exactly the same tickers that I traded. But he was down 89,000. Manaz the Madman, he's a crazy trader. You know, one of the guys that I follow, and he finished the day down 142,000 on a day. Traded exactly the same tickers: AYRO, Solo, FUV, and KXIN. And then Chris, same thing. He was down about $77,000. Traded KXIN. That's where he took majority of the loss. The point that I'm trying to make here is that yesterday, Friday, was a lot of short traps, and you know, they pull back, they trap shorts, and they go higher. And a lot of people lost a lot of money. And part of the reason for that is when you're wrong, you have to acknowledge that you're wrong, but do not stay wrong. Cut it for a loss. And how do you know you're wrong? Well, the profit loss would tell you exactly how you're wrong. If you're down $1,000, if you're down $2,000, it means whatever you're thinking about the trade, you're completely wrong about it. So you have to acknowledge that and snap out of that. And as you guys can see, I managed to dig myself out of that, you know, $1,400 loss and finish the day green $300. And the reason for that is halfway through, I snapped out and I said, look, I'm down $1,400. Whatever I'm thinking about this particular trade, I am wrong. I have to accept that. I am wrong about it, because by acknowledging that, I managed to flip and make the money back and traded it. You know what I mean? So that's what happened. So one of the trade that I took right here was Solo. As you guys can see, it was a massive mover on a daily chart. It was a massive mover for the last week or so. It started from $4 area and it went all the way to $14. Now, how did I trade it? Well, as you guys can see, shorted this. It didn't work. I bailed out. Tried again here for the pre-market high. It didn't work. And I tried here again when it felt like it was topping. I mean, you can see it. It felt like it was topping. It looks like it's about to flip, roll over, and wash out. I had a starter. It wasn't working. I got out. And here it picked. It looked like it was going to wash, but it didn't. It supported. This is short traps where it looks like it's about to fall, roll over and fall, but it supports and goes higher, right? So I was noticing that, and I managed to cut. When I noticed it was in the backside, I managed to cut my losses quick. And when we got to the peak here, as you guys can see, shorted, and managed to cover. Shorted here, managed to cover, and I was done with it, right? So this is where I kind of covered some of the losses. As you guys can see, you made about 300 bucks. But all of these small chops that you see, 73, $16, 59, they all came from here. So they all came from here. When I know I was wrong, I was looking at the level 2. It wasn't as it should. It wasn't washing. It wasn't doing what it was supposed to do. And when it's not doing what it's supposed to do, I bail out. I don't hold. Solo was one of them. KXIN, I did trade that small. KXIN, as you guys can see, downside hold. I shorted that and I got up pretty quick, and it ripped after hours. So the next one is FUV. FUV is the same thing. Shorted into that and cover to this area. Shorted and cover as well. You know, I didn't make a lot of money on it, but you know, it was better. The next one that I traded was FTIV. Now, part of the problem with staying wrong is this. When I'm down on a day, usually what I would do is I do not give myself a lot of room. I won't risk $1,000 more. What I would do is I'll scalp. I'll turn into a scalper. So whatever's on the table, if I get a profit, I'll lock it. I'll chop that. I'd start digging myself out. I would not try to play for a bigger picture move or anything like that. But it costed me here because I had a short right there, and I pretty much got out right there. Where if I held, this thing dropped to all the way to $10. I would have been up, $2,000 on this particular trade, but I only managed to make $500 on it. And the next one, where I lost pretty much majority of the money, was BLNK. And the problem with this is exactly what we talked about yesterday. When you're wrong, do not stay wrong. Do not have a bias into the trade, and I did this. As you guys can see, pre-market, it was actually a massive gapper. Pre-market, I shorted this, right? And I shorted right there, and I had to cover into market open here. That's where I took about almost $400 loss. And then it kept going higher and higher, and I got really chopped into this. And this is where that $1,000 loss came from. But the good thing that I did, one of the things that I did was, I realized I was down, and whatever I was doing in the trade, it was wrong. And when it's wrong, what you have to do is you have to think about the 3 pillars of day trading. The first one is your trading strategy, which includes, your fundamental analysis, technical analysis, and the actual trading strategy, where to short, where to take profit, and all those sorts of things. The second part is trader psychology. Now, trader psychology or trader mentality is, how to avoid chasing, how to avoid having a bias in a particular trade, how to avoid fear of missing out. Those kind of things are trader mentality. And the third and final pillar of day trading is risk management. Part of the risk management is to know when you're wrong and to not stay wrong, right? Cut it off, understand you're wrong. If you're in a trade, you're thinking it's going to go down, but it doesn't go down, it starts to go up, and you're down $1,000, it means it's very clear you're wrong about the trade. Do not hold. Cut it off, reassess the situation, only look at what's in front of you, and then go from there. So that's what I managed to do. Halfway through the trade, I snapped out of it. Okay, I'm down. I don't want to turn this into a $3,000 to $4,000 loss. And, I managed to flip it around. Now, as part of my risk management, the maximum loss that I want to take per day is $2,000. The reason why it's $2,000 is whatever it is, if I'm down $2,000 on a day, I'll get up out of the trading desk and I'll walk away. The reason for that is, as a trader, you have to understand you will have red days. And some of those red days, you cannot turn them into green. Right? So you have to have a set number where you walk away. Or else, what is it going to be? 5,000, 10,000? When are you going to walk away? Right? 20,000 when your account is blown? For that reason, I set the price at $2,000 because $2,000, to make that $2,000 back, it would only take me maybe 2 days. I don't want to give back, a week worth of profit. I don't want to give back a month worth of profit. I don't want to chop my account in half. So you need to understand you are bound to have a red day. And if you're bound to have a red day as a trader, you have to understand that you need to put a cap on that red, right? You need to put a cap. You need to say, okay, if I'm down $1,000, whatever your account can hold, if I'm down $5,000, if I'm down $1,000, if I'm down $2,000, I'm going to walk away. That's to prevent you from blown out. That's to prevent you from giving away a week worth of profit, giving away 2 weeks worth of profit. Anyway, guys, I really appreciate you watching this video. Please like this video, and if there's any takeaway for you guys from this particular video, make sure you comment it down below so that I know what to kind of emphasize on. Now, enjoy the actual live trading footage, and I hope you guys can learn a little bit from that as well. Alright, traders, welcome to the live trading part of my videos. This is going to be, a great lesson for me as I'm reviewing it as well, and I hope you guys will be able to take something from it as well. So it's pre-market right now. I am short BLNK 300 shares with an average of, $18.36, and I'm also short Solo 300 shares with an average of $8.99. Now, I usually do not short pre-market because I expect market open to be a surge of volume, and that could contribute to the price going high. But right now, again, as I talked about yesterday's trading recap, do not come to the trading table with a bias, and that's what I did.
So right now I'm down about 200 bucks. I took half of a little bit of BLNK. I added. Now I am almost 500 shares in BLNK. I'm thinking here I'm full size in. I want this thing to wash out. But if it doesn't wash out from here, I need to eat the loss and kind of walk away. So that would be the proper way of to trade, right? So I took half off. It wasn't going my way. I'm completely out. I'm down. I lost about 400 bucks on that particular trade, right? Now the smart thing to do here is to recognize, okay, it came over the pre-market high. I kind of need to walk away from this particular stock. Now I'm holding Solo. Solo is going against me as well. I'm down 500 bucks on the day right now. AYRO, I'm into that trade as well, hoping it would reject right here from VWAP area. So I added on Solo, 600 shares. My average is 917 at the moment. But that thing has not got to my risk level yet. So my risk level is pre-market high. As it's approaching the pre-market high, I want to be adding to that. So I added into that. Now I am in 900 shares of Solo with an average of 920. And I want this thing to wash $9 to $8.50 for me to cover. So that would give me a nice, $500 profit, which probably puts me in green on the day. So that's my thought process. But if it doesn't hold, if it doesn't break $9, and if it's holding up, I want to get out. To my surprise, I got back in again BLNK with an average of 20.31 right now. Remember the first short that I had was at $18. Right now it's at $20. So that's why you have to cut it early. So I'm still down 400 bucks. But I shouldn't be trading BLNK. If you guys look at the chart and where $20 is, it's actually just above the pre-market high. And I'm kind of fighting into a trend that is undecisive, right? And I got out of it that quick because it was going against me, and I ate another $138. So all in all, I took two trades right now, two trades in and out, and I lost $536 on the day, both from BLNK. So now that's two strike, right? I have a rule. One of my rules: if you lose 3 times on a single on a ticker, then you walk away from that ticker. You don't trade it at all. So you try it 3 times. If it doesn't work 3 times in a row, you're wrong, wrong, wrong. You don't want to get emotionally attached to that particular ticker. So that's the trader mentality of that. So Solo, it flashed that 9, but it bounced back up. So I didn't like how it was holding. If you guys look at the trade, it actually ended up going higher. So I got out of it for about $50 profits, which is very small because I was in 900 shares. Now I'm only holding BLNK. To my surprise, I got in again. This is how you know I'm emotional. I'm not even having a 300 starter share. So boom, 600 shares straight away, right? And I took half, and I'm trying to get out of it. I'm out of it again, right? And I ate another $261 loss on that trade, right? This is how you know you're emotionally involved. You're not having a starter. Boom, you go and beat your share size because you want this thing to wash out. So now I lost 3 times in a row, BLNK. That is a sign I'm down 800 bucks on the day to walk away. And now Solo, I'm in 1,000 shares. I never do that. I always go 300 shares. This is how you know that I'm emotionally involved. My brain is tickled with emotions at the moment, and I'm jumping in aggressively. I'm going 1,000 shares and I'm trying to add. I took half right here, 500 shares I'm holding. And now I'm definitely wrong about the way I'm trading. BLNK, to my surprise, again with a 500 shares. This is the 4th time in a row I'm trading BLNK. This is why you need to study and you need to really deeply look into trader psychology, trader mentality, fear of missing out, revenge trading, chasing. And now I just got out of BLNK again for another $141 loss. So this puts me down 800 bucks just trading on BLNK. So BLNK, I just lost 800 bucks on it. Why? Because I kept going back in and out, in and out, in and out emotionally. Usually, the first 3 times I lost on it, that would have been it. That should have when I walked away, right? That should have been when part of my rule where I should say, okay, I'm not going to touch this sticker again. I'm wrong about it 3 times. That's it, right? Because you can't keep going back to the well. You know what I mean? So, AYRO, I'm trying to, add right here. Try to cover a little bit here, and I'm looking to short higher. So I don't like the way AYRO is bouncing from this VWAP, so I'm trying to get out of it, completely out of it, AYRO, and I got out of all of my trades. As you can see, I am down $843 on the day. Now I'm starting to say, okay, I'm definitely wrong about the way I'm trading. I'm definitely emotionally involved about in this trade. So BLNK off the book. I took it off. I didn't trade it after this. This is when I start saying, okay, I need to, go back to the trader mentality, the three pillars of my day trading, which is, your trading strategy, your trading psychology, and your risk management. Risk management is okay because I'm not over $2,000, and that's my max loss per day. But the trader mentality, trader psychology right now is terrible, especially with BLNK. I'm chasing, I'm oversizing, all those things. So things are, going out of control. So this is the kind of time where you need to step back, realize, go back to the roots, go back to the basics, and say, okay, the P&Ls tell the tale. They tell the truth. I am wrong about this trade. I am down $800. So I need to reassess the situation and go back in again with a proper risk management, a proper size, and cut out that, $1,000 in, $1,000 out. Cut out that part, right? So that's what I managed to do. And as you guess, so in the explanation before the live trading, I actually managed to finish the day up about $300. At some point, I was down about 1,500, and I had only $500 left as a risk management. Because if I was down 2,000, I was gonna walk away because that's my max loss that I could take per day. The reason for that is pretty simple. $2,000 I can make back in 2 days, right? And I don't want to give back a week worth of trade. Anyway, guys, thank you so much for watching. I really, really appreciate it. I hope there is a takeaway from this, and if there is, make sure you leave a comment down below. Tell me what the takeaway is from this video. And also, there's a link down below for a free chat that I have on Discord. Make sure you pop in, say hello, and we talk a lot about trading and all the things that I talk about. We discuss them in depth in the chat room. Thank you, guys. I really appreciate it.